Assalamu alaikum and a very good morning, everyone. Welcome to the third day of the F8 Prepare to Pass webinar. It is a very crucial day today. Again, I do understand that a lot of you do have issues or you struggle with the substantive procedures or audit evidence. Also, please remember that this is a topic which is spread across the entire syllabus or the entire paper. So you will see bits of substantive in section A, you could see bits of substantive in all questions of section B as well. So if you are a student who has been continuously failing between 45 to 49, you are either not completing the paper or substantive is an area that you probably struggle with as well. I need you to be very clear on the stage of audit that we are right now, guys. Your examiner has continuously said that she has issues with the fact that you are rote learning the audit procedures rather than understanding or applying them to the scenario. So I'm just going to minimize the chat box for a little while and go over what we've done up till now. The technical knowledge portion and then whatever in reality the work that we've done up till now. So if you remember, on the first day we discussed that you could be getting new assignments through either tendering, so you submitted a tender, or maybe you advertised, or maybe you were referred through by another firm, for example. Before you accept the assignment, there are a variety of factors that you need to consider, which include your client-related issues like the director's integrity, firm-related issues like your independence issues, etc., etc. Once you've considered all these factors, you sign a contract called the engagement letter. Once the engagement letter has been signed, you can officially begin your assignment or your audit engagement. There are two parts to the planning stage. You have the audit strategy and the audit plan. Audit strategy has further 4 areas. You're going to understand the client, you're going to evaluate audit risk, you're going to determine preliminary materiality and decide scope, timing and direction. Based on this strategy, which is the overall approach, you're going to have a detailed step-by-step plan. After the planning stage is the stage which we covered yesterday, which is when you evaluate the system through which financial statements were prepared. So you already understood the system at the planning stage. You document it using narratives, flowcharts, or questionnaires. You have to test for 2 things. You need to look for problems in the way the system was designed, and you need to evaluate problems in operating effectiveness of the systems as well. All the problems that you find, you have to report them right now. Do not wait for the audit to end. Report them right away to the management in a report called management letter or letter of weaknesses. And then you decide whether in the next stage, you'll be picking up a bigger sample size or a smaller sample size. So this was like the technical knowledge, the technical terms portion of this. In reality, what we've done up till now, the very first thing that we did was, for each area of the financial statements, we found out which of these areas have higher chances of fraud or error. It could have been a balance, account balance or class of transaction. It could be a disclosure or notes to the accounts. So the first thing that I did was find out which areas have a greater chance of fraud and error. The second thing that I did was I focused on the system of preparing financial statements. So I wasn't looking at the amounts. I wasn't looking at the sales 20 million figure. I wasn't looking at the property, plant and equipment 50 million figure. I was looking at the way or the process through which those amounts are recorded. So which areas have a higher risk of fraud and error? What is the way or the system through which financial statements are prepared? That's the 2 things that we have done. At this stage, we will now actually confirm the amounts and disclosures. So before I start the technical portion, in the simplest of words, you're going to pick up the classes of transactions and account balances. You're going to ask for their breakup. you're going to pick up samples and you're going to confirm them. So for example, for just a quick revision, I hope you guys know that a class of transaction is a term that we use for our P&L items, and account balance is a term that we use for our SOFP items, and disclosure is a term that we use for notes to the accounts. So for example, I'm picking up a class of transaction which is sales. Suppose this sales are recorded at 20 million. At this stage, I'm going to ask for the ledger or the breakup. I'm going to pick up a sample and I'm going to confirm these amounts so that I can give reasonable assurance whether, in my opinion, this amount is giving a true or fair view or not. So that's the idea behind substantive testing. Substantive testing is just a fancy way of saying confirm the amounts and the disclosures in the financial statements. The technical portion or the technical terminology needs to be understood. This is not a story that I want you to use in your answers, but this is a story that you need to understand. So please guys pay attention. The idea is when the management gives me the financial statements. So with reference to F8 in particular, when they gave me the P&L, when they gave me the SOFP, and when they gave me the notes to the accounts, they were implying some promises. So there were implications of promises. So they were promising me that these financial statements are complete. They did not explicitly say it to me. So they didn't say it to me, but that was what was being implied, that these financial statements are complete. They were promising that all the assets in the balance sheet or SOFP actually exist. They were promising me that all the expenses in the P&L have actually occurred. So I'm not talking about the technical wording. I'm talking about simple English. It's like you saying to me, Afaf, I can promise my mobile exists. I can promise I actually incurred an expense of $50,000 for this activity. I can promise I've told you completely all my expenses for this month. So the implication was certain promises that were made about the financial statements. Now, as an auditor, remember the first day, we're the auditor, we're the third party. We do not trust them. We do not trust the fact that these financial statements are complete. We do not trust the fact that all assets exist. We do not trust the fact that all expenses have actually been incurred. So therefore, as auditors, we have to test these promises. Are they really complete? Do assets really exist? Have these expenses actually been incurred? So in the simplest of languages, financial statements, when they were given to me, certain promises were being made. I have to test these promises. These promises are called assertions, and me testing these promises is called substantive testing. So substantive testing is a process whereby the auditors will test the assertions made by the management, and then they will need to gather sufficient appropriate evidence. So if after a week you're going to come back to say, Afaf, their promise of completeness was wrong, I need sufficient appropriate evidence to support this promise. If you're going to come back and say, oh my God, this car did not exist, I need sufficient appropriate evidence to support this. So the promises, when you test them through substantive testing, the assertions, you need to get me evidence that whatever you're saying is correct as well. So this is what the concept is. Let's go to now the technical portion. So this is area which is very important for knowledge-based testing as well. There are separate promises. Don't ever write this down, but I'm going to keep replacing this word by promises. There are separate promises about P&L items and related disclosures, and there are separate promises about balance sheet items and related disclosures. So let's do this one by one. This is very simple. When I gave you the P&L and related notes to the accounts, my first promise to you was every item in the P&L has actually occurred. So be it a sales transaction or an expense transaction, income or expense, I promise you all of this has actually occurred. I'm promising you that not only the transactions, but all related disclosures are complete. So all income has been recorded, all expenses have been recorded, all related disclosures or notes have been recorded. I am promising you that all amounts and all disclosures are correct. So whatever is written is the accurate amount. I haven't under or overstated anything. Everything has actually occurred. Everything is complete. Everything is accurate. I'm promising you that whatever has been recorded in the P&L belongs to this accounting period. So if the P&L is for the year ended 31st December 2017, then all the income, all the expenses actually relate to 2017. That's my next promise to you. Everything is in the correct account. So there is no marketing expense that I have classified as salaries and wages. There is no finance cost that I have classified as cost of sales. So everything is in proper accounts and presentation is according to the reporting framework. Be it the amounts or the disclosures, everything is in a language which is understandable, it is relevant, and all my presentation is according to the relevant reporting framework. So the first learning that you need to do are the promises that are implied when the management gives me the profit and loss account and the related disclosures. Some promises relate to amounts only, some promises relate to amounts and disclosures both. Then I have a slightly different set of promises for the balance sheet, because remember, my balance sheet is as at. It's not for the year, it's as at. So my promises are slightly going to be different. I'm promising you that all the assets, liabilities, equity, etc., it actually exists. So in English, I can't say, you can't say, apart my mobile has occurred, right? You would say my mobile exists because that's the right English. So instead of occurrence, you're just saying existence really. You are promising me that all the assets are actually owned by you and all the liabilities are actually owed by you. So you're promising that you have right over the asset, you have an obligation for the liabilities. You're promising me completeness. Again, be it the amount or disclosures, you're promising that all the amounts are complete along with the disclosures. Instead of just accuracy, I have a wider context. I'm promising that all amounts and disclosures are accurately valued, right? So, for example, and I'll give you a very simple example, guys. As accountants, if I ask you the value of a building in your balance sheet, that's not just the cost. In accountancy, the value of a building in my SOFP will not just be the cost, right? You will have depreciation, you will have impairment, you will have revaluation, all of that comes in. So I can't simply say accuracy and stop there. I'll have to talk about accuracy, valuation, and allocation. So it's a different wording there. Classification, presentation is the same. Everything is in the right account and all amounts and related disclosures are presented according to the reporting framework and everything is understandable and relevant. So if I go back over here, you now need to have understood that when the management gives me the financial statements, they are making separate assertions for P&L and related disclosures, and they're making separate assertions for SOFP and related disclosures. That's the first learning that has to be there. I'm assuming you know that also has to be learned. Then I spoke about something called sufficient appropriate evidence. Again, it's very self-explanatory. Evidence means proof, right? So audit evidence, the technical language, it's the information that you're getting so that you can arrive to a conclusion. So when you give me an opinion that, oh, this is okay or this is not okay, I need evidence to back your opinion. You can't just randomly say, oh, I think this is okay. I need proper evidence for that. Evidence could come from source documents. So source documents like my order forms, like my GDNs, etc. It could come from accounting records, your ledgers, your journals, etc. Or it could be coming from other sources as well. So you could be getting evidence from outside the company through discussions with management, etc., etc. Please remember, and this is something you need to learn, that auditor needs to make sure they have sufficient appropriate evidence. Sufficient focuses on quantity. Appropriateness covers information should come from a reliable source and it should be relevant to the assertion being tested. So I'll just give you one example of each. Just quickly change the color. So for example, if sales is a risky area, evidence would only be sufficient if I find more of it. So one of the simplest linkages to understand is, if it's a risky area, I would need greater evidence for that area. With regards to reliability, for example, an original invoice is more reliable than a photocopy of that invoice. Relevant is slightly more tricky. It has to be relevant to the assertion being tested. I'll explain what this means. All right. Now listen to this very carefully, guys. I don't think I can ever hope that my writing improves. Anyway, relevance is something which is more application based. I'll give you an example. I asked you to confirm the existence of a car that they have recorded in their property, plant and equipment. Okay, so I want evidence that the BMW that they've recorded in their property, plant and equipment, it actually exists. You said, oh no, no problem. I've seen the invoice. They bought the car for $1 million. So as a confirmation of existence, you showed me the purchase invoice. I will say, I'm sorry, this is not relevant to existence. A purchase invoice can only tell me how much the car was bought for. It is not relevant to the assertion that I asked you to confirm. I asked you to confirm the promise of existence. Don't give me the invoice. So the idea is, when you are confirming, the auditors, when you are confirming the assertions, you need to gather sufficient appropriate evidence. In F8, please remember that you are expected to have a good discussion on what affects sufficient or quantity of evidence, what affects reliability of evidence, and what you mean by relevant evidence. So let's go back. I know what promises I have to confirm. I know what sufficient appropriate evidence means. Let's do one last thing. How do I get the sufficient appropriate evidence? Sort of, what options do I have to confirm existence? So options to confirm or test or verify assertions. Okay. Hang on. Okay. So your auditing standards say, I'll make your life even simpler. I've told you which promises to confirm. I've told you when you're confirming it, you need to get sufficient appropriate evidence. I will also tell you how to do it. So I'm not going to let you use your mind at all. I will tell you exactly what options you have. You could be inspecting a document. So you could say, oh, I confirmed the right over the car. So I confirmed that the car is owned by Scans by looking at the ownership document. So you could be inspecting a document. You could also be inspecting a tangible asset. So sort of like physical confirmation. You could be observing a process as it takes place. So, for example, you always observe an inventory count. Yesterday, from test of controls, we observe whether the clerk can access the payroll data or not. So another option you have is observe. So observe a live process. You could carry out comparisons. Remember, it's the same thing. You could carry out comparisons with last year, with industry information, with budgets, with your own predictive estimates, etc., etc. You could actually ask from the management. So inquiry from the management, you could ask from the internal auditor. So some evidence you can get by inquiring or discussing with the management or internal auditor. You can get external confirmation. So you can be, for example, confirming from customers, you can be confirming from suppliers, from the bank, from the lawyer. So external confirmation can also be taken. This is very important, guys. I don't know why you confuse this. You could recalculate something. So if I ask you to recalculate a piece of paper, you are just confirming the arithmetical accuracy. I want you to pick up a calculator, do 2 plus 5 minus 1, and just tell me whether the figures are or the total is arithmetically correct. Re-performance means you don't check just the calculations. You do this yourself. So instead of just picking up a calculator, you're going to need your knowledge, your experience, and I want you to re-perform this working. So if I ask you to recalculate the finance cost, you ask for the workings done by the management, you pick up a calculator, add and subtract. That's recalculation. If I ask you to re-perform it, for example, I'm asking you to put the workings to one side and calculate this yourself as well. So, there's a difference in how it's actually very self-explanatory as well. So you could be re-performing a reconciliation statement, for example. So your auditing standards say that you have to confirm the assertions, you have to get sufficient appropriate evidence, and you could be confirming the assertions through inspection, inquiry, etc. All information that needs to be learnt by you for knowledge-based testing as well. So just to wrap up, substantive procedure is a procedure which is designed to detect material misstatement at assertion level. You could be doing comparisons, or you could be checking the details of that transaction as well. Again, if you remember, same comparisons when I did at the planning stage, the idea was to identify risk. Now we're at the substantive stage. At the substantive stage, I will be using the same comparisons, but this time around to confirm the assertions. So a basic understanding of what the substantive procedures include and what they basically are. Now, before I open up the chat box, I have one last thing to say. I think it was yesterday, someone asked me, and I was very surprised, the difference between test of control and substantive. I might be in a clearer position to explain this. Test of control is when you confirm the way financial statements were made. Substantive is when you confirm the actual amounts and disclosures. So I'm not talking about the pre-numbering element or the signatures now. I'm now talking about the completeness, occurrence, accuracy, etc. of the amounts and disclosures in the financial statements. Opening up the chat box, guys, for questions that you might have with regards to the knowledge portion of substantive testing. So I'm asking for questions regarding the knowledge portion. Then we'll start substantive testing one by one. Was there a problem in the audio in the middle? All right. All right, guys, come on. Any questions at all? If there are no questions, can you please give me proof of life by saying a hello, hi? I need proof of life. Okay. Yes. Neha, all the information. Okay, thank you. Guys, Neha, all the factors which affect sufficiency, which affect appropriateness from your revision notes, you have to learn all of them. Even if they're 5 or 7, all of them need to be learned. Guys, the revision notes I made after a lot of struggle, and they will, by struggle, I mean like, going through all the stuff. So they are the minimum knowledge that you need to have for F8. So there's no skipping those notes. You can't skip anything that is there in your notes. And you can rely on them for your preparation from now onwards as well. All right. So, all right, thank you. Saqib, I've already done this. It's up on your screen right now. Test of control is the system of preparing financial statements, and substantive testing is when you confirm the actual amounts for this year. So you're making the 31st December financial statements, the actual amounts and disclosures will be confirmed. Ankit, test of detail is when you, for example, pick up an amount and confirm by looking at the invoices, the ledgers, the source document for that amount. So when we start, just in about a few minutes, you will see that to confirm different transactions, I'll be looking at different source documents and ledgers, etc. Sarah, substantive testing is what we're starting today. Zainab, yes, that's the right answer. So substantive testing is simple. In the simplest of words, it's confirming the amounts and the disclosures that were made in the financial statements. There's certain more knowledge-based information that is needed. When these recordings are uploaded, you will be able to access them and revise what you've missed. Sohail, we did evaluating internal control yesterday. There is no definition to this. It's an entire process. Whatever we did yesterday is what you called evaluating internal control. So you have to test the process through which financial statements were made. Serish, you can learn substantive testing, but in an exam question, we'll do questions today. You will automatically know that you can't just copy paste everything you've learned. You'll have to do your learning and then identify which of your learning areas you have to write down in your answer. But to answer your question, yes, you'll have to learn substantive procedures. Noman, substantive testing, Noman, you tell me, when I say you have to prepare the financial statements for the year ended 31st December, will they be before or after the year end? You will have your answer then. Please remember that financial statements are for a year and as at a certain point. Once the financial statements are prepared, then you test them. So of course, once the financial statements are prepared, as at 31st December, I will have my balance sheet. For the year 31st December, I'll have my P&L. I'll have the related notes to the accounts. I have to test them. So once my 12-month information is there, then I will start the substantive tests. If it's an interim audit, then that's slightly different, but I don't want to go into that detail right now. Any other questions, guys? Okay, so for the next about 10-15 minutes, I need you all to stop typing, because the techniques that we do today, that's basically your way of understanding what substantive testing is or substantive procedures would look like. I'm starting off with receivables and sales. I will be going into that in a lot of detail so that you understand the technique for thinking of the procedures as well. So let's start, guys. I'm minimizing the chat box. I will not be able to see your questions or comments anymore. It is requested that you stop typing, please. All right. So the first area we are covering is procedures on receivables, and then subsequently we'll add sales as well. Okay. So assuming that you're the team which is working on receivables, please remember your receivable is an account balance and your sales is a class of transaction. Okay. The first thing I have to do is pick up a sample of receivables, and I have to do something called circularize them. Circularize is a fancy way of saying you send them confirmation letters. So here's the story. Suppose my client has 25 receivables. In my sample, I've picked up 3. Mr. A, as at 31st December, owes 50,000. Mr. B owes 70,000. And Mr. C owes 200,000 to the client. So these are the 3 receivables I picked up in my sample. A few rules that you need to keep in mind. When I type up a confirmation letter, the letter should be on the client's letterhead. So you will draft a letter on the client's letterhead. You will ask the client's management to sign it, and you will send the confirmation letters. The replies, however, should come to the auditor's address. So I'm writing to Mr. A, B, and C to say, as per the client's record, you owe them 50, 70, and 200. Please confirm if this is the right balance or not. So as at 31st December, you picked up their balances and you sent the confirmation letters. If you could all please stop typing for a little while, guys, so that you pay attention, unless, of course, there's a problem with the sound, etc. So that's the first thing that I have to do. So let's focus on this. I know for a fact that I pick up a sample, I might not be able to circularize all the receivables. If the number is lesser, maybe you can go ahead and do 100%, but normally it'd be a sample. The rules are, the letter will go on the client's letterhead. It will be signed by the management. So they'll give me the details of the receivables, but all right, guys, I'm opening up the chat box. Before I start the discussion, a very quick sort of recap. Please remember that your questions, majority questions in the F8 exam will look like this. All right. A mini case with a requirement, which literally just starts off like this, and you will have to pick up what answers you have to write. So keeping in mind the given information, can you tell me which procedures you would be writing? Oh, why? You've been, okay. I'm hoping that you won't write as short as this, but I think, yes, Sarah, you're on the right track. Very well done. I am so happy to see that almost every single one of you have this right. Ankit, I just want you to, Ankit, I'm not okay with your answer. No, actually your answer 1124, that is completely wrong, because you cannot ask directly from the customer, because that direct asking is called circularization, and they've said you cannot circularize. Very well done, guys. If you could all please, very well. See, Neha, you can't write select a sample, audit trail, etc., right? You'll have to tell me the complete sentences, but you're on the right track. So the technique is, guys, the only reason why I gave you a lot of time to read this is so that you can understand how information is given. Exactly. If you could all please stop. The clue for me was in these two lines. The first thing that you need to remember is I cannot write anything from the circularization procedure. So because they've said I cannot send them confirmation letters, then I cannot write any of the other those procedures. Other than that, I can write answers from existence and I can write answers from valuation. So if we go back, I can only write this from existence and from valuation. I will not give you any marks if you write anything from completeness, by the way, guys, because my answer has to be very specific. If anything from completeness screen comes up, that's a 0, 0, 0. I will only give you marks if you write from these screens. Any of the general procedures, you're getting full marks. Any recoverability procedure, you're getting full marks. Any allowance procedure, you're getting full marks. If you write something from sales, I'm not going to give you marks, because it limits itself to receivables. The detailed checking of sales invoices will not be given any marks at all. So this is a very good indication, Sarah, because this requirement does not talk about completeness. I cannot write whether any of the completeness issues, because the scenario tells me only to verify existence and valuation. Vasanta, they have told me, but see, the point is, Vasanta has a very good question. Is it okay for the management to ask us not to circularize? We'll have to decide. At the end of all my work, if you think you still do not have sufficient appropriate evidence, then this will have an impact on your opinion, right? So ultimately, they can stop us because, it's their business, it's their customers. But whether it's okay or not, I can only conclude at the end of the remaining procedures. So yes, they can do it. Neha, you can only do analytical procedures regarding valuation. So anything that comes under valuation. The repeaters, particularly the repeaters, I hope you're getting sense, or I hope this makes sense when I say that, number one, yes, you have to learn substantive testing. Number two, even if you've learned it, you might be failing because you're not tailoring your answer. You have to tailor your answer to what is given in the requirement. I thought just the audit trail. Nope, Sarah, you still won't get marks. You still would not get marks because you are using the word completeness. For my requirement, I do not want you to confirm completeness. Sarah, completeness is everything complete? Have you missed out on something? They're saying we cannot hear you? Okay. So completeness is everything there. Existence is whatever is there, are you sure it should be there or not? Yes, recalculation of receivable days can be written as well. Sumbul, it doesn't matter. If they've said you can't circularize, you can't circularize. Noman, why should I write down the answer? It's a pass exam paper. The examiner was nice enough to write it down for us. I will not write down the answer for this. Please read the standard answers. Numan, read the standard answers. That's exactly what you need to write. She writes it very simply, guys. She doesn't complicate this. She writes in one complete English sentence. It's very simple to understand. So you can't even say, oh my God, this is difficult, okay? All right, guys, we're now moving on to a few more areas. Again, you need to pay attention to techniques. The next area we're covering is property, plant, and equipment. So we're talking about tangible, non-current assets. Lesser to learn over here, but very similar concepts. Number one, I want to make sure, and guys, please pay attention. Stop typing, please. So I have 25 motor vehicles. My first assertion is, have all of them been completely recorded? So that's what the idea is. In order to confirm all 25 cars have been recorded, I will take a sample of physical asset and I will check that all of them have been recorded in the non-current asset register. So a sample of cars or buildings or motor vehicles or whatever you're doing, and check whether they have been completely recorded in the non-current asset register. Remember, non-current asset register is not a part of my double entry. So in the next one, I have to make sure that the register is reconciled to the general ledger. So if you remember the audit trail, that's exactly what I'm doing. A sample of assets, have they been recorded in the register? Is the register reconciled to the general ledger? 2 marks for completeness done. Existence will be the opposite. I will take a sample from the non-current asset register. I will go and see if that asset actually exists. So whatever you've recorded, does it actually exist? That's what I need to confirm. I need to confirm that, okay, so the idea is the car could exist. So it's standing in my office. It exists. But are you sure it belongs to the client? So the right can be confirmed by inspecting ownership documents. In my example, the registration document. So you're looking at the ownership document to ensure it's in the client's name. If the assets are insured, so in most countries now, insurance is a requirement as well. It's a legal requirement. So the insurance companies would have done their own working as well. So you can look at the ownership documents. You can look at the insurance policies, again, to confirm that the asset is in client's name. So very simple. Are all assets recorded? I'll take a sample of actual asset, check it's there in the register, and is the register reconciled to the general ledger. For existence, I'll take a sample from the register and go see if it actually is there. Right? I need to check the ownership documents or the insurance policies to confirm it is in the client's name. So it's not very difficult to retain it like this. Sometimes your examiner gives specific points. So during the year, maybe you bought 5 new buildings. So now I want procedures or your audit work specific to any additions during the year. They are very simple. Let's start with the easy one. Number 1, review the minutes of the meeting to make sure this capital expenditure was authorized. Again, if you remember, the purchase of capital expenditure, the approval has to come from the board or through a budget so that we know that we won't run out of money eventually by buying these expensive assets. For a sample of assets bought during the year, you can match them to the invoice. So the cost at which you've recorded, you can confirm the invoice. Very, very important. You need to make sure that whatever has been recorded is capital expenditure. So remember, we did a question in which the risk was that training has been capitalized. The response is right up here on your screen right now. So again, you will review the breakup of that amount and confirm that only capital expenditure has been capitalized in the list of the assets bought during the year. For any assets sold during the year, number one, you can match the proceeds to the cash book and invoices. So I've sold the asset for $2,000. You can confirm this through invoices and cash book. Make sure that cost and depreciation has been removed from the records. You can recalculate the gain or loss on disposal and match it to the P&L account, and check that all disposals were authorized. So any additions need to be authorized, any disposals need to be authorized. So let's go back. Completeness, very simple, asset to register. Existence, register to actual asset, right through ownership documents. If it's a new asset, I need to confirm the cost. I need to make sure it only includes capital expenditure. It was all approved. Sold during the year, I can confirm from invoices and cash book. I can recalculate gain or loss, profit or loss on disposal. I need to make sure all the entries have been made. I want to make sure this was properly approved. Sometimes she would specify that assets have been revalued. So maybe one building which has been revalued during the year. Number one, and this is exactly how she writes it. You will ask them to give you a schedule of all the assets that were revalued and cast. Cast is an audit term for add them. Okay, so like totaling. So cast this to confirm that the adjustment is accurate. You can't revalue just one building. I have to ensure all similar assets have been revalued. I need to recalculate depreciation to confirm it has been calculated on the revalued amount. And remember, an expert would have been used. So the amount of valuation has to be matched to the expert's report. Again, you can't just look at the expert's report. You need to make sure that the expert who has revalued the building was skilled and independent. Make sure your non-current asset register has been updated, and review the disclosures or the note to the accounts. Your examiner does not expect you to know what the disclosures say, but she gives you for each area. This point number 7 is a very easy one, Mark. Review the disclosures for accuracy as well as completeness. So if nothing else, if it's an accuracy or completeness issue for any area, you can at least write down the disclosures point. All right, let's see if you have any questions still here. I'm going on to the difficult portion of property, plant, and equipment. We've covered completeness, existence, right. We've covered assets bought during the year, sold during the year, and revalued. Any questions up till here before I move on to the difficult portion? I genuinely believe property, plant, and equipment is one of the easiest because it's something which makes sense. My building, do I own it? Have all the buildings been completely recorded in my register? Whatever new buildings I bought, what work will I need to do? Whatever buildings I sold, what work do I need to do? If I've revalued one building, is that enough? What work will we need to do? I need proof of life, guys. Do you think we got disconnected, Manasa? Okay, cool. I like that. So at least I have proof of life. Okay. There's one person. Damaged non-current asset? No. If it's a damaged non-current asset, a tangible asset, this is not my headache. I'm the auditor who's verifying that the amounts which are recorded in the financial statements are correct. So whatever amount the asset was sold at, I'm just focused on that amount so I can calculate the profit or loss, etc. So it doesn't matter to me whether it was damaged or not, as long as the effect of that sale is recorded correctly in my register. So please remember, you're not the management, you're the auditors who are verifying the financial statements. So just the amounts or disclosures which go into the financial statements. Guys, I need you to wake up now. Please remember, so in an exam, if it's a question on property, plant and equipment, remember there are additions, disposals, revaluation, which you would remember very easily. But guys, please remember that as a part of valuing an asset, you need to have depreciation as well. Could you please be very, very careful that you understand the difference between depreciation policy and depreciation method? I will not tell you that difference, but you need to know it. Because with regards to policy, my work is different. With regards to accounting estimates, my work is different. So number one, with regards to the policy, which is, for example, on pro rata basis, I need to make sure it is appropriate and it is the same as last year. So appropriateness and consistency in the policy has to be evaluated. That's my first procedure. I can recalculate as well as reperform my depreciation charge. I could just check the arithmetical accuracy, or I could simply reperform the working myself as well. This was on policy. This is now on method. Okay, so straight line, reducing balance, which includes my useful life as well. That's what I'm now working on now. So to evaluate, and remember, your depreciation method and your useful life is an accounting estimate, which is judgment. So this is judgment. Okay, so for example, let's take the example of a risk that comes up. They've extended the useful life, for example, right? I can compare the method, etc., with last year. I can compare it with industry practice. So my client is depreciating computers over 20 years. Okay, so for computers, their useful life that they've estimated is 20 years. What was the useful life last year? What was their estimate last year? Sorry. Plus, what's the industry practice? So in the industry, do they actually depreciate computers over 20 years? And this is an interesting one. If you can remember it well and good, look at the non-current asset register. So sometimes there would be assets in the register which are fully depreciated. So net book value is 0, but they're still in use. That basically means you depreciated them too quickly. So a building with a net book value of 0 because it was depreciated over 3 years only. So that would give you an indication whether your accounting estimates appear correct or not. So if it's a question on depreciation, guys, make sure you divide it between policy and method, and recalculation, reperformance is something else entirely. Because it involves judgment, as was the case with allowance for doubtful debts, I asked the management to give me a written representation. And as is the case with most areas, you will review the disclosure to make sure that any disclosure requirements are acceptable, complete, adequate. So 5 main areas that you can basically work on with regards to depreciation. Any questions regarding the depreciation aspect, guys? Any questions regarding depreciation? Yes, Sarah. A change in accounting policy will have a retrospective effect, and therefore I don't want to talk about this, but okay, your comparators will need to be restated as well. So yes, Sarah, you're right. Serish, yes, of course they can. If you think that their accounting estimate is not okay, then you ask them to correct it. If they don't correct it, then it will have an effect on my opinion. Oh God. Muzammil, existence for depreciation cannot be checked. Could you please not rote learn this, guys? Do not rote learn this. Depreciation for the year is a class of transaction. It is not an account balance. For classes of transactions, you do not check existence. All right, guys. Any other questions? So, Serish, yes, if the judgment is wrong, then yes, your opinion will be affected. But we will do this, inshallah, the day after tomorrow. But we don't just quickly change the opinion. We give them a chance first. We can only see completeness and accuracy as they are just valuation based. Oh, don't say they're just no, Zainab, don't say they're valuation based. You can see completeness and accuracy because it's a class of transaction. It's a class of transaction. All right, guys, let's move on then. Okay. The next area we're sort of covering is your development expenditure. So if you remember, and by the way, I'm going to do a slightly higher level than F8, but it's okay. Okay, so it's slightly higher than what is expected at F8 level. Okay, so in the SOFP, they have capitalized 5 million as development expenditure. I need procedures on this. Your procedures will fall in two categories, guys. Number one, should it even be there? Should it even be capitalized? And if yes, okay to capitalize it? No, let me reword it. If it is okay to capitalize it, other procedures. Okay, let's start. So I'm going to give you a very specific example, and I hope I'm not picked up by the government. So let's just do this. I'm not doing this. This is a made-up example in my defense. Okay, so my company, and I don't have a company, but my company is, listen to this carefully, okay, is making a software which has the ability to hack into all the databases in the world. Okay, so all the government agencies, all the databases can be. Do you think I can be picked up because of this? Oh, nothing, sorry. So it can be hacked into, my software will have the ability to hack into all the databases across the world, okay? And that software is in the process of development. And all the money that I've spent up till now, that is 5 million, and I've capitalized this in my SOFP. So 5 million is for a software of hacking that I'm developing. I'm going to sell it in the market, and therefore I've made it into an asset and capital expenditure. The first thing auditor will do is check whether it can even be made an asset. So they need to get evidence. Will I be able to get probable economic benefits out of it? You are going to ask me for reports from market research. So you will say, Afaf, how do you know you will be able to sell this? Have you done any market research? Have you received any advance orders? So to confirm that I can actually sell this, this is market research. to confirm that I can actually sell this, to confirm probable economic benefits, the auditor will inquire from the management whether they have any advance orders, or they will inspect the results of market research, which would tell me whether there's a market for my software or not. The next question is, do I have the intention to complete this? As an auditor, you're going to inspect the minutes of board meetings, plus you will ask me to write it down. So you would say, Afaf, could you please write down that you do have the intention to complete this project as well, or this software? You are going to look at my budgets and forecasts to see if I have the financial resources to complete this. Okay, so the financial resources can be confirmed by looking at my budgets for the coming year. Is the project technically feasible? So it's still in the process of development. Any prototype testing that has been done, any feasibility reports that I have up till now, you're going to inspect those reports. So I will only let you record this asset if there is a market for my software, if you have the intention to complete this, and you have the financial and, to be honest, technical resources to complete this. Is this year even technically feasible? Do you even know what you're doing? Is it even working? The most interesting one, there could be a market for this, but unfortunately, it is illegal to have this. Therefore, you do not have the ability to sell this software. The minute as an auditor, when you find out that you do not have the ability to sell this, the criteria has not been met, this needs to be removed from the SOFP and taken to the P&L as research expenditure. So to confirm my ability to sell, to complete this and to sell this, you will be looking at the legal aspect to this as well. Expense can be measured reliably. This is basically where you ask for the breakup of 5 million and you will match it to the source documents like employee salaries, etc., to make sure that the amount of 5 million is correct. So this is, by the way, P7 level. So this is a much higher level than F8, how to confirm each criteria. But I wanted to give you an idea that, you know how you kept saying, you have very good rote learning when you say, oh, we want to know if the criteria has been met or not. This is how you check it. The minute you find out that even one of the criteria is not met, you will not let them show it as an asset. You will ask them to take it to the P&L as research expenditure. If, on the other hand, everything is okay, suppose it was not my hacking software, it was just a regular accounting software, and everything is okay regarding this, then you need to talk about amortization. And guys, by now, you should know this very clearly. Amortization is an accounting estimate. It includes judgment. The procedures are very similar to what we've already done. Number one, you can recalculate it or you can reperform it to confirm its accuracy. This is the easy one. You will inquire from the management the basis. Okay, that's wrong spelling. And you will ensure the bases are reasonable according to your own knowledge of the client. Exactly the same terminology that we've done before. You will ask the management to give a written representation that according to them, the bases are reasonable and this amortization is accurate. And the last one, you will ensure that the disclosure requirements of IS 38 have been met as well. So ultimately, if it's an accounting estimate, these are the four easy ones. For example, if you're amortizing this over a certain number of years, for example, then you can have an extra mark to see how did you come up with that useful life, for example. So that's basically how you need to retain knowledge of development expenditure. I'm going to open up the chat box to see if you have any questions, guys. What is the ability point? If you can comment for better understanding. The legal aspect. That's the simplest way. See, ability is very similar to probable economic benefits. Are you able to sell this or use this, right? So why do I have it separately? Just include the legal aspect to it as well. So there could be a huge underworld mafia who's willing to buy this from me. So I can sell it. There's a market for it, but I won't be able to do it because it's illegal. Anything else, guys, before we do an exam question? Yes, Serish. In any case, you need to first confirm the criteria. You will still need to confirm the criteria, guys, because you can't assume that, oh, it's okay, it's development expenditure, I trust them, let's move on to the remaining 4 points. So you can't do that. Are we ready to do a question? All right, you have 5 minutes, guys. I want you to think of procedures for this question up over here. Screen's changing. Yeah. So you have 5 minutes. We'll start the discussion in exactly 5 minutes. 5 minutes from now, guys. All right, guys, I'm opening up the chat box. Can I assume all of you are very confident that you would get 4 out of 4? Guys, do you think you can get 4 out of 4 in this? There is so much you can write. Let me just read through the answers you're writing. Zainab, 1158, that's a 0 mark. Because what are you verifying the existence of? That has nothing to do with what is given in the requirement. So no marks for that. Vasanta, no marks. No marks until you give me one specific way of confirming the procedure. So I would want you to... Oh yes, Vasanta, the first criteria one was too general, but the amortization one is absolutely right. Zainab, I think Zainab, your answer is too general to discuss the details to see if criteria is met. You need to confirm the criteria. So guys, please confirm that. I know you are looking at, I know what the past exam answer says. I know it. But that is not an expectation that the examiner would have from you now, or at least I would have from you now. So I want you to be more detailed. To confirm the criteria, we need to confirm probable economic benefits, and we can confirm it by inspecting the report of markets research results, etc. Most of you have, yes, Sarah, absolutely right. So most of you have given me the right answers. I'm very happy. You're absolutely right. Guys, please make sure that you, Serish, absolutely right. Very good, Abdul Rahman. Very well done. So you can write answers for development expenditure criteria. You can write answers for amortization. All of that can be done over here as well. So very well done, guys. Very well done. So I hope you're slightly more comfortable in how you need to prepare for this. Let's move on to the next one, guys. You remember long-term loan was the one which had a long list of risks attached to it. So let's start with the work that you have to do on your balance as at the year end. So let's start. Can someone quickly tell me hang on. Just give me one sec. Okay. As at 31st December 2017, I have a loan from RBS recorded at, let's say, $7 million. Could you tell me, guys, if this is an account balance or a class of transaction? If you could please tell me if this is an account balance or a class of transaction. It is an account balance. Absolutely right. It is an account balance because ultimately this is the balance as at 31st December is going to be a part of your SOFP. So let's start. The first thing, the balance as at the year end, which is 7 million, I can confirm from the loan statement from the bank or the confirmation letter that I sent to the bank. So at the end of every month, the bank would be sending me a loan statement. So as at 31st December, the balance should be same as the one recorded in my accounts. Similarly, when I send them a bank letter, you could also confirm the balance on your loan account from the bank letter as well. So there are two easy marks for confirming the loan balance. I now am concerned that you might be trying to hide the loans from me. So maybe on top of RBS, you've taken a loan from another bank, maybe HSBC, and you've not recorded it at all. So how do I confirm that all loans have been recorded? Number one, by inspecting minutes of board meetings. So if a loan is going to be taken out, this would have been discussed in the minutes. I can say, oh, by the way, you discussed loan from HSBC. Why is that not showing in the balance sheet? You could also inspect bank statements to see if there is a significant deposit. So there's a huge amount coming in, a significant deposit, and I don't know where this money has come from. This will also give you an indication that maybe this is a loan which has been taken and they're trying to hide it from my SOFP. With regards to the interest that is chargeable or the repayment terms on whether any asset has been provided as security, on whether there are any covenants, for all of this, my evidence would be the loan agreement. So has any asset been held as security? Let's check from the loan agreement. Is there any covenant which has been breached? Let's check from the loan agreement. Very important, guys. Further marks. If there is an asset which has been held as security, you need to review the disclosures to make sure they are adequate. If there are loan covenants, you will have to review if there has been a breach, and then you will have to work up procedures on breach need to be conducted. For example, if it's a fine, you could be simply paying penalties for which a provision is needed, or if it's a repayment, then this could have a going concern impact as well. Your F8 examiner does not expect you to go into all this detail, but you still should know this. Your accountants, this is very basic accountancy. You should know what the impact of a breach would be, but this is definitely F8. For the finance cost, which is, by the way, a class of transaction, you can recalculate it and compare it to the client's figure. So make sure they've recorded the right finance cost. Again, the disclosure for security we've already done. This is something you should also know. Remember, the risk is that the split between current and non-current loan is not there. Okay, so what we can do is we take the loan outstanding amount, which was 7 million, and we will check that it is disclosed within 12 months and after 12 months correctly in the SOFP. So all the stuff that you did in risk, your responses would be, okay, I'll go check whether this has been done. What happened? Huh? Guys, if you could just give us 1 second, just give me 1 second. I'll resume in a second, hopefully. Okay. I'm going to take a 2-minute break, guys. If we could please we will be taking a 2-minute break. We'll resume in a few minutes from now, okay? Taking a quick break. We will be resuming 2 minutes from now. Okay, guys, we are back. The break's over. Okay. I'm sorry, there was an earthquake in the city where I'm based right now. So we just had to make sure that we follow the procedures. And I wasn't willing to do it. I stayed for you guys. So we just wanted to have a quick confirmation whether we needed to evacuate or not. So we're okay now. So we're okay. Anyway, so we're back. So to confirm the long-term loans, the last one would be checking the split in the SOFP. So this is basically the presentation element that we're confirming right now. Any questions regarding long-term loans, guys? Again, like property, plant, and equipment, the procedures on long-term loans are much simpler than the rest of them. Any questions at all, guys? Loan covenant is a condition attached to a loan, a condition. Are we okay to move on to a super difficult area, guys? All right. So very important, the next element. Some part of inventory is always there in your notes, guys. It could be as a part of your risk. It could be a part of before, during, after inventory count procedures, or it could be substantive testing. It is always there in your F8 exam. So from your revision notes, guys, please make sure you're very well prepared on what happens before the inventory count, what is expected to happen during the inventory count, and what happens after the inventory count as well. All of that needs to be there. I am focusing on one particular assertion, which is accuracy, valuation, and allocation. This is the most important one, and this is an area that students will mess up their answers and therefore not get marks. Guys, please remember, so for example, I'm giving you an example. Suppose my closing inventory is valued at, say, 1 million, okay? I'm not talking about existence. I'm not talking about completeness. I'm not talking about right. I'm talking about the accurate valuation aspect. We need to remember that inventory has to be valued at lower of cost and NRV. So when I talk about valuation procedures, my procedures need to cover how I will confirm the cost. It should also cover how I will confirm the NRV. So students forget that and they write some portion of it and therefore they do not get marks. Let's start with the first element. We know that if we're talking about raw material inventory only, then the cost can simply be confirmed by inspecting the invoices. If we're talking about inventory of work in progress, then the cost confirmation would include three things. I can confirm the raw material cost from the invoices. This is how you need to remember it. I can confirm the labor cost from supported documents like salary sheets, etc. And I can recalculate overheads to confirm that the allocation is correct. Similarly, for finished goods, all three elements will need to be confirmed. So when you're confirming the cost, you need to be very clear that we have three types of inventory and you'll have to figure out which inventory is mentioned so that I can talk about the cost confirmation accordingly. I'm now going to talk about, as always, the difficult portion, which is an accounting estimate. Please remember, your net realizable value is an accounting estimate. It is estimated selling price less estimated costs, right? If you look over here, these are exactly similar to what we did for receivables. And inventory, which is, so suppose I have a chair in my inventory, which has been recorded at $50. How do I perform the NRV procedures? Number one, the chair which has been recorded at $50 post year end. So after 31st December, has it been sold? Maybe it was sold at $40, which will now tell me that my inventory was overstated. So if it has been sold, You will check how much it was sold for so you can confirm whether your estimate was correct or not. If it is still unsold, you'll have to discuss with the management whether it is slow moving or whether a provision needs to be created for this. You need to check how old the inventory is. For most types of inventory, if it's very old, there are greater chances that my NRV would have gone down. Again, 2 marks in analytical procedures. I can calculate inventory days, match them to last year. I can calculate GP margins and match them to last year. For both of them, any significant fluctuations need to be investigated. During the inventory count, so I'm writing 6 because there were 2 covered over here. During the inventory count, if you noticed any damaged inventory, come back to the office and follow up on its NRV. Okay, so discuss with the management to determine what the NRV of that damaged chair would be. Because it is an estimate, you get a written representation. So as is always the case, you will review whether it's reasonable and you ask them to write it down for you. Also remember that your NRV calculation includes estimated cost to completion. So you ask the management how they determined this. How did they determine the estimated costs? And then you will review whether those estimates look reasonable or not. These are all extracted from your past exam, guys. You need to be very clear that inventory is at a high risk of overstatement. It might not exist, it might not be owned, or it might not be valued correctly. I've covered the valued correctly portion right now. That's the main portion that you would be focusing on this slide. Any question regarding the valuation of inventory, guys? Which points? And Sarah, if it's in voice issue, you can listen to the recording and you can do this. But very quickly, they're very similar to what we did in receivables. An inventory which is recorded at the year end, I need to see what the NRV is. Has it been sold after the year end? If yes, for how much? If not, is this slow moving? How old is this inventory? Is this damaged inventory, for example? You can calculate inventory days and GP margins and compare them to last year. So exactly stuff that we did for receivables as well with regards to recoverability. During the inventory count, when you were observing the count being done, you noticed a broken chair. You note down the details of that chair. You now have to make sure that the chair has been recorded at the right value, the lower of cost and NRV. Noman, you will, of course, you can check completeness and existence. You can read your notes to confirm that. We cannot cover all aspects, unfortunately. So I've only picked up the one which is the difficult one. Of course not, Serish. Inventory count is a control. Before inventory count, during inventory count, after inventory count are all separate things. Guys, why do you rote learn things? I don't understand. Why would you not be very careful that we are confirming an assertion? It cannot be done before or after an inventory count, during an inventory count. It's after you've come out of the count. Sarah, yeah, something like that. Something on that grounds, yes. So no, these are assertion verification, guys. Yes, comparison with last year. So these are all assertions. So for inventory, you have inventory count, which is a separate topic altogether. You'll have to prepare for it. So, for receivables, you have circularization and then assertions verification. Similarly, for inventory, you first have inventory count and then assertion verification. I've picked up valuation from assertion verification. So this is not all of the information. This is just a part of an assertion that you're testing. All right, guys. I have intentionally chosen a question which is slightly more difficult. It does relate to inventory. I want you to be slightly careful. It is F8 level. I need you to tell me if you can come up with 4 procedures. 4 procedures related to information that is given over here. I'm going to give you 5 to 7 minutes to do this. So please think of procedures that you would write over here. All right, guys, I'm reading your answers. Almost all of you have gotten them right. Very well done. Noor Ahmed, you can answer them in any order. You do not need to 1226, Neza. You can answer them in any order. Very well done. Okay, guys. So did you understand that you could write answers for work in progress, cost or NRV? You could write answers for finished goods, cost or NRV, but more specific were the ones I'm looking for. I think Sarah is the first person who's given this. Let me quickly read her answer. No, Sarah, no, that's not. You're thinking too much like the management. I don't have time to do all of this as the auditor. Very well done. Abdur Rahman Bhatt, he is inspecting supporting documents to verify the value. Now, the idea is that I'll give you a 0 mark for writing all of this because you've used the wrong terms. The cost, which is 700 and something thousand, how much is it? The 720,000, that's the cost that you need to confirm by looking at and mention which supporting documents. So 720 needs to be confirmed. I'll give you marks for that. Valuation, cost of material, recalculate them. Aging, inventory, Serish, no. I'm not sure if I'll give you mark for aging. Okay, general, yes. Neha, you're partially on the right track. Sohail has the right answer. It's a good answer to start off with. Thank you, Vasanta 1227. Thank you, well done. I'm going to read out Vasanta's answer. For the goods on consignment, Vasanta was the right answer, not Sohail. For the goods on consignment, since the net realizable value is reduced from 720 to 400, inspect the records to ensure they have been written down. Guys, you should have gotten this 1 mark. We are asking simply you need to confirm whether the adjustment has been made or not. Sehrish Iqbal, that's a very general answer. I will not give you marks. You write answers like this and she will not let you pass the F8 exam. Yes, Shamir, absolutely yes. You are going to ask them how you came up with the amount of the scrap value as well. Okay, guys, I'm minimizing the chat box very quickly. Guys, very quickly, if you could all please pay attention, stop typing. A few of the things that you can focus on, let's start with the easy marks. They are saying, just a minute. They are saying the cost is 720. I can't just believe them. I can confirm the cost. So lots of marks would come from confirming raw material costs from invoices, labor costs from labor records, and recalculating overheads, etc. Then they said they can sell it for 400,000. You inquire from the management, how did you determine this 400,000? On what basis are they saying that they can sell it for 400,000? I don't need to go to the market myself. I only inquire from them. Then you talk about the adjustment. So you now know that there has to be an adjustment of 320,000. So you can confirm whether that adjustment has been made. So without discussing anything general, I've gotten quite a few scenario linked marks. Always write the disclosure element. That's always one easy mark. So disclosure requirements of IS2 have been met or not. Other than that, because of these lines, you can write the rest of the points as well. For all finished goods, the cost and NRV points. For all work in progress, the cost and percentage of completion, etc. points. So almost all of you were giving me the right answers. You were talking about aging. You were talking about post-year-end sales. I will give you marks for all of this. However, my point for doing this question was these 3 lines. I was expecting that you would be very specific to E243 and give me more specific answers with regards to how cost and NRV for these would be confirmed. So that's the sort of linkage that you need to keep in mind, guys, when you are doing your questions for F8. We're now going to move on to a general topic. This is a topic that we've already covered, by the way. So we've already covered allowance for doubtful debts. We've already covered useful life and depreciation. We've already covered NRV just now. I'm now going to focus on other provisions. So my focus now, for example, there's a lawsuit for which a decision is pending. Or maybe you have done restructuring, or maybe you have made certain employees redundant, or maybe there's a law that you have breached that you need to look at. So different, another one, maybe you offer warranties, therefore provision for warranties. So your auditing standards say, and I'm now going to be talking in particular reference to provisions, that the first thing you need to understand is how the management developed their estimate. So if they've made a provision, they think it's probable, right? Provision is made when the outflow is probable. You need to find out how they developed the estimate, which process they used, the data, the assumptions that were made. So you can actually write this language because this is the standards language. Then you need to do the estimate yourself. So they have recorded a provision for lawsuit for $1 million. You need to do this yourself. You could contact the lawyer. So you could confirm from the lawyer yourself. You can check correspondence between the lawyer and the client, but you need to come up with your own judgment whether you think the probability is there or not. So your own estimate about the probability, your own estimate about the amount. Review post year-end events. So sometimes after the year end, you would get an indication whether your estimate was correct or not. So as at 31st December, they had made a provision for lawsuit for 1 million. After the year end, the judge has ruled against you and you now have to pay 5 million. So a post year end event has told me that my estimate was wrong. It needs to be increased to 5 million now. Again, because it's an estimate, we've been doing this already. You get a written representation from the management. As is the case, you review the disclosures relating to accounting estimates. If possible, you can compare it to last year. Please remember, provisions for lawsuits, restructuring, etc., they cannot be compared with last year because they're not routine provisions. I can do this for doubtful debts. I can do this for provision for warranties. I cannot do it for one-off provisions like restructuring, etc. Also, if applicable, you can compare last year's provision with last year's actual results. So last year, your provision for warranties was 7 million. Actually, you ended up paying 8 million. So that means you don't really know how to make an estimate. So with regards to accounting estimate, guys, these are the generic points that you need to keep in mind. So in the past exams, quite a few times there was, for example, a food poisoning lawsuit that is outstanding. Now, for that food poisoning lawsuit, you would say, okay, I need to confirm whether it is probable or possible that we will lose the lawsuit. And how can I confirm that? By writing to the lawyer. Again, not only will the lawyer confirm the probability and amount, he will also tell me again whether the amount is correct, outflow is probable, etc., etc. You can also review subsequently whether I lost the lawsuit or not. So estimates, the concept remains the same. It is a judgment. Always write the easy procedures. I'm marking them on your screen right now. Always write written representation, always write disclosure, always write the first one. You will ask the management how they decided that a provision needs to be created, etc., etc. Any questions regarding provisions, guys? These are very easy marks. Please remember, for all your answers, do two things. Get evidence regarding probability, get evidence regarding amount. That evidence could come after through third parties or through discussions or through your own workings as well. Any questions regarding provisions, guys? I will only be answering questions if you have them regarding provisions. Sarah, the probability that I will lose the lawsuit, the lawyer will tell me. If I lose the lawsuit, how much will I have to pay? The lawyer will tell me. So in my example, the amount of provision, how much I'll have to pay, is coming from the lawyer. For redundancies, the amount will be confirmed from payroll records. For restructuring, the amount will be confirmed from other supporting documents as well. So every provision has a different confirmation method. Both. Independent, Kiran, it can be from an external person or from the management. The idea is that you estimate it. You decide how much the provision should have been. Ramiz, no, F3. The knowledge which is tested in F8 is F3 level, not F7 level. So even lesser than F7. All right, guys, the last area that we're doing, which is very important, and then we'll do a discussion on examiners' feedback. It is an area called relying on work of others. When you talk about an expert, you know the answer because it's easy. You check the expert's competence, professionalism, experience, independence, etc., etc. I've picked up something else. This is when you're relying on the work of a service organization. So the story is, when you were auditing the P&L items, there was a payroll expense for the year. So their payroll expense for the year is 700,000. You wanted to confirm this expense. When you went to the client, they said, we haven't calculated this. We have outsourced payroll. So the idea is that this amount of 700,000, the evidence is not with the client, it is with the service organization. The actual procedures are a lot more detailed that you will do if you select P7. The ones at F8 are much simpler. Number one, understand exactly what has been outsourced to the service organization. Is it all parts of payroll or only some part of it? Also understand whether this amount is material or not. Is this 700,000 material or not? Because this amount has been tested or calculated by someone else, you will need to test the internal control at the service organization. So the salary slips, etc., etc., this does not lie with the the process is not with the client, it's with the service organization. You have two options. You can visit the service organization and perform test of controls, or you can ask the service organization's auditors to send a report. A type 1 report, you're only asking for deficiencies in design. A type 2 report, you're asking for deficiencies in design along with for operating effectiveness. So instead of performing test of controls yourself, you can go and you can ask their auditor to perform this as well. Please remember, the same case as was with the expert, even if you're relying on the work of an expert or a service organization, you cannot mention it in your audit report. So you cannot write that for payroll, we relied on the service organization's controls or records, or even the expert's controls or records. So relying on work of others, you could be relying on work of an expert. You can prepare this yourself because it's not very difficult. Or you could be relying on the work of a service organization. Any questions regarding this, guys? Can you see? That's okay, as long as you can see. I think it charged me. That's okay. All right, guys, any questions regarding this? The second point, okay, Sarah, when we were doing internal control, we said do this, do that, appointment levers, blah, blah, blah. The idea was, in the case of my outsourced organization, the client does not have any of that information, because all of this is being done by the service organization. So instead of testing controls at the client, you will have to test the controls at the service organization. That's the summary. If the company is using work of others, Rami's opinion will still be given by the auditors. Muhammad Noman, yes, it can be answered in both, asked in both internal control as well as substantive. Ramiz, yes, outsource. I have no idea, Ramiz, what you're saying. Fazlul Murshid, I've written what a type 1 report is and what a type 2 report is. Type 1, you will only ask for deficiencies in design. Type 2, you will ask for deficiencies in design as well as operating effectiveness. These are terms we covered yesterday. Vasantha, yes, that's a very good point. If the service organization gives us permission, only then we can do it. We can only do this if the service organization gives us permission. If they don't give us permission, then we'll have to see whether our opinion can be affected. Sohail Khan, this is all for legal expert. All your answers, these are all for experts. Outsourcing for payroll, auditor should be. No, Ramiz. Auditor is not giving assurance on any others. I'm the external auditor for Scans. Scans has outsourced payroll to someone else. I'm the auditor. Scans financial statements are still my headache. The service organization's auditors are someone else. I'm asking them for a report on internal control. I'm asking them for a report on internal control. All right, guys. We're now going to wrap this up with a few points. We've already done this. You could be asked to explain procedures without any scenario, or you could be given a mini case and you could be asked to make up procedures for this. So this is the easy portion. This is what we've been practicing during the exam session as well. These are the examiner's comments, guys. If you please read these very carefully, the examiner is saying, number one, you are not tailoring your knowledge. When you say tailor your knowledge, that means exactly what you did with the first question. If I'm asking about valuation only, then you have to be specific to the scenario. Again, you are not writing the right answers. If you're asked about completeness, you will not get marks for writing answers on valuation. Again, same point again and again. Unless you tailor your knowledge, simply giving a list of generic points will not translate to exam success. So use the scenario, come up with the answers. That's the basic thing you have to focus on. Guys, please remember that entire substantive procedures have to be prepared because these are your risk responses, some of these. These are your substantive procedures and you will be using them again in review tomorrow. So even for review questions tomorrow, I will ask you to first confirm the provision or the inventory and then tell me what happens in the review stage of audit. So you'll have to be very careful that you prepare your substantive testing completely from the knowledge summary. Is there any question before we wrap up, guys? Any question at all? Muhammad Noman, you can differentiate it by studying for F8. If even now you do not know the difference between internal control and substantive, then that means you're not prepared for F8. You'll have to start from the beginning. So the only way you can differentiate it is prepare through your revision notes and you'll be good to go. Sarah, bless you. That is such an amazing thing to say. Thank you. We'll talk about this after your F8 result. Let's see if you feel the same after your F8 result. No, question requirement, Noman, will be very specific. Question in F8 will be specific. When it says procedures generally, it will always be substantive procedures. That confusion is no longer there. Now, if you remember, we did questions yesterday. It was specifically deficiency test of control. So she won't make you think anymore. Tehreem, the only way you can overcome exam pressure is if you prepare well, which basically means that you attempt as many pass exam questions by hand as you can. So when you've done so many pass exam questions, when a new one comes up, you will say, oh, I know this because I've done something like this before. So during those 3 hours, 20 minutes, if you're taking the computer-based exam, you'll have to be very clear that you can only be comfortable if you've done all the questions. Thank you so much, Seresh. Hassan, recordings will be updated. The link is there in your answer screen. All right, guys, thank you so much. We are doing another technical area, which is review tomorrow. I'll see you tomorrow. And again, guys, please use the platform. Today, you will have some questions on substantive that you can practice. Yes. Yes. In Pakistan, you can only take the computer-based exam. My plan is tomorrow, I will talk about the computer-based techniques as well. Opinion is slightly more technical, so I think I might have some time left tomorrow, so I'll put up the slides which talk about the techniques to use in computer-based exams. Thank you so much, guys. Have a good day. Allah Hafiz and goodbye. I'll see you tomorrow.